Ladies and gentlemen, welcome to the Big Tech Frenzy. In this video, we're going to be talking about SoFi. We are going to be talking about NVIDIA, about FIGMA. Oh my gosh. Let's just go right into FIGMA. We have to here. This is insane. FIGMA is up another 24% in the after hours. Okay, we're going to follow it in overnight markets as well. I don't think we're going to see a lot of traction there, but this company just went public, okay, halfway through the day. So this is the beginning of the day. And then right around 2 o'clock, then we began trading, starting at $30 per share and then ending the after hours at $143.49. That's up 250%. Then tack on another 24% on top of that. In fact, let's go ahead and drop out of this and let's open up overnight markets, which I like the UI of, but it doesn't show us overnight markets. And if I don't get overnight markets on FIGMA to be able to track, they don't. What am I thinking? Of course, they don't even have it. Yeah, brand new company. Of course, they're not going to have overnight markets for this stock. That was a little slip of the brain real quick. But yeah. So aside from that, let's go ahead and talk about SoFi, Amazon, which did not have the greatest of days. Geez, man. Overnight markets down 6.53%, which is a slight recovery from what we actually saw during, them actually talking on the call. That was a hard listen, I'm telling you. Getting down as low as 215.50. Wow. But, yeah. Anyway, let's, sorry, I'm getting distracted by a whole bunch of things trying to figure out this, overnight market stuff and everything for FIGMA, but just crazy. Did anyone here actually end up getting, FIGMA shares? Or the real fun is Reddit? Oh, you're so true. You're very right. I can't talk to it. It's going to be one of those days. It's going to be one of those days. We have them. The English will be off, but yeah. Reddit, jeez. I think we're going to do a Reddit deep dive this Friday. I think I want to figure out this company because we're not even at all-time highs. This has spiked a lot higher, up to $230.41. They're putting up unbelievable, just phenomenal numbers, okay? So I might want to figure out if we get involved. Now, I'm not a Reddit user. That's the only problem. I mean, I use it from time to time, but I'm definitely not on it enough to realize that they were growing 78% year over year. Like what's, but yeah, either way, this is something that I need to start following here. Okay. In terms of that, after this video, I have a SoFi video coming out on the dilution, by the way. If you guys are interested in what SoFi ended up doing, obviously we saw that there was more information that came out. We know the pricing and everything along these lines, but not only that, SoFi's investor relations team came out to say what they want to do with this dilution, or with the capital raise that they had, not the actual dilution itself. Just joined. Can you give me a quick recap on the discussion so far? I've been live for 4 minutes. Is Amazon and Reddit a buy? So I think Amazon is a buy after these earnings. Nothing ended up coming out that I am extremely mad at. The market ended up selling off the stock mainly based on free cash flow, obviously lowering because capital expenditures is increasing, but that's also good for me because a lot of that is going towards infrastructure, like they said, custom silicon and NVIDIA and AMD. So as a shareholder of NVIDIA, still very excited about that. However, I think Stephen Fiorillo is correct that the moves that Amazon is making will be a very long-term benefit. There's no e-commerce site or many players trying to divest themselves away from Amazon.com. The real worry is that Microsoft and Google Cloud might be better at advancing the speed of growth for those cloud revenues, but Amazon's by far the largest player. And Andy Jassy, I think, had not the greatest tone whenever he was trying to talk up their cloud products. But honestly, I think he is very confident. It's just, he made it seem like it's a coin toss if they're going to win, which I did not think instilled a lot of confidence in their shareholders. But Tanner, I'll be working the next 3 evenings, so you can take those days off. Thank you. Appreciate that. I mean, for the most part, I do take weekends off, but tomorrow we still have more earnings, I think. I don't know if there are any that I follow. I don't think so. We'll check. Powell's making the markets tank. I don't know if it's Powell. I think it might be Trump. Trump is out here saying crazy things right now. He just came out and said he's putting on new tariffs on many different countries, including my own. We went from 25% tariffs to 35%. So, as Amit here tweeted out, this is the list right now. Switzerland at 39%, Indonesia 19%, Taiwan 20%, Turkey 15%, South Africa 30%, Cambodia, Vietnam, Canada, Malaysia, Thailand, Venezuela, all seeing increased tariffs. And it's funny, right? Like the way the market works, it's like there's certain months that are good in markets, and then there's certain months that are bad. And for some reason, like clockwork, it follows a trend. It's incredible. It's absolutely incredible. But yeah. Either way, I'm not one to try to buy in or sell out based on these types of macro shifts. I try to follow it, make sure that I understand what is happening. But like Bluebird says here in chat, I am mainly a net buyer of stocks, and I will be looking to buy dips here. So bring back Stock Tank. Yeah, the problem is that, honestly, I thought that whenever I started covering SoFi and started covering a bunch of these different names, that there were similar creators for every single name. There are certain people that love Carvana, and there's certain people that love Amazon and Booking Holdings and Marathon Digital, and some of those maybe. But the truth is that it's hard to get people individually to come on at a very high level and pitch individual names for you for an hour and a half. At least at my skill. Maybe if I was like, Graham Stephan level, I can get whoever I want to come on. I'll get every CEO to come on and pitch their stock to me. But as a tiny YouTuber, I don't really have that kind of pull. So there's the names that I want to look into. I don't find that there's many retail investors that just cover it extensively. For example, Reddit, right? Is there a Reddit guy that I can go to, guy or gal, that I can go to and have get pitched on the company? So I think I'm going to do it myself if I can't find the people to sort of pitch me the company. But overall, it looks freaking phenomenal. Revenue increased 77% year over year. Their actual cost of sales was only increased by 55%, leaving a gross profit margin of 90.8%, which was up quarter over quarter, essentially the highest quarter they've seen other than Q4 of last year, which was 92.6. So gross profit margin continues to expand. Their operating expenses look perfectly, like they look great. Operating profit, phenomenal. This is a crazy business. So I'm going to look into it for sure. EBITDA at 71.6 million. Yeah, oh my gosh. 50-cent diluted EPS. Crazy. No, I'm going to do that probably this weekend or something, and maybe start next week, because I'll probably need a week to build them or something. But every Friday or something, we'll do quick deep dives into these companies. Why is it selling off? Are you saying Reddit selling off? Because it's definitely not. Unless you're referring to Amazon. Which, like I said, I think that it's not as much confidence in their ability to win in cloud, which they already are. They're by far the largest player. But the beat, which, by the way, it was a beat on cloud. It was just so freaking small that no one cared. And then after the unbelievable success that Azure just showed off, essentially pointing to 39% growth year over year next quarter, is just insane. So, but I actually think I'll be a net buyer. Well, I'm definitely, like, I'll just be a buyer. I don't have to say net buyer. I'm not going to be selling Amazon shares. I think I'm going to be a buyer of this stock more tomorrow, if I can get my hands on some good shares. And yeah. Whoever got Figma shares, though, oh my gosh. I can't get over this. Up 334% in hours. Like 6 hours or something. It's not going to stay that way. I don't know how this ends. This seems a little expensive. But yeah. What about Palantir and AMD coming Monday? I'll be listening to AMD. I don't think I'll be listening to Palantir. Well, I probably will be privately, just to see how they're doing. Alex Karp is definitely one of those CEOs that you know, it's fun to listen to the call and the Q&A. He's everyone's favorite hype man, and not in a bad way. He's just very eccentric. But so I'll be listening, but I don't have much to add on Palantir. That's the only problem. Don't wait to buy the dip. Chase the wave on Reddit. $10 to the community portfolio. Payush, thank you, brother. I will. I'll add $10 to Reddit tomorrow morning. Amit's dad got 9 shares. I thought he got like 19 shares. I thought he got more than that. I am not buying into Palantir earnings. Not one bit. Not in the 150 plus ranges. I'm okay. I requested 100 shares and got 1. Yeah. Yeah. That just shows you how oversubscribed they were, that they actually were able to still split it out and give people individual shares. Wow. Hood dumping tomorrow below 100. I mean, it could, if the market is selling off, you know, maybe. Yeah, definitely could be a possibility. I freaking hate these tariff changes, man. I'm curious what they still are looking for, especially from like Canada, for example. Why bump it from 25 to 35%? I haven't listened to it today because it just came out very recently. But yeah. Tarek says, what are you buying, Tanner? Well, I'm going to buy a little bit of Amazon. I'm going to be actively buying SoFi over the next quarter or so. The more I look into it, guys, the more I realize that, like, I should have been buying all along. Like, I think Q3 of 2024 was a turning point with the loan platform business. This quarter, Q2 of 2025, will be the actual like that's when everyone noticed. You know, I made a couple posts on X and stuff talking about the loan platform business, just how insane it is. They increased the take rate by 100 basis points. So before, whenever they'd sell the loans, they'd get like 4% on them. Now, whenever they're selling loans, they're getting 5%. Doesn't sound like a huge difference, but that's a 25% increase of those two different percentages, you know? So not only are they gaining more confidence, but they're actually like allowing themselves to sell it at even higher pricing. So where's the top? We have not found the top for pricing. They're expanding out of their credit box, which means that the total addressable market that they can service in these areas is just crazy. Nuts, man. Absolutely nuts. Holy crap, my pockets hurt today after closing. It's going to happen, right? In the same way that, it's very exciting to hold whenever things are going up. You have to have that same stomach and strength to buy things and hold things whenever things are going down. So, yeah. Please talk about the money that they'll do with SoFi. So they post about it on X. They said that it could be possible for an acquisition. However, they don't have anything picked out. They could pay down their debts or they could use it for lending growth. And maybe it'll be a mix of all three. However, I have a video coming out of what I think it will be, and that's going to be dropping probably at like 9 o'clock, 9:30. Essentially, whenever I jump off this, I'm just going to hit post and send you guys all there. But so I'm going to keep the cards close to the chest. But overall, I am very excited. Sounds like lending. We'll see. What is wrong with Nubank? It's not that. It's Trump. It's Trump. Trump is kind of going after Brazil right now. There were comments made about Brazil's payment system. Overall, I don't think anything is going to affect Nubank at all. But the market just always gets a little bit concerned because if it is affecting them in terms of tariffs, that doesn't directly affect Nubank, but people are worried about the customer or the consumer of Nubank's products, which are Brazilian individuals. So it's tied, but it's also not tied. But yeah, I'm hoping that we end up seeing good quarterly results. If not, and there's just a full-blown economic war between Brazil and the United States, maybe I have to rotate out and like, I don't want to have to do that. But if this is going to be through the entire course of Trump's term, then I mean that is opportunity cost. So I don't really like to trade that way, but that can sort of happen, and Nubank and Mercado Libre might be under that scope. And will there be names in America where I can just sit comfortably and feel a little bit more guarded from the choices that Trump decides in office? Tanner, do you think it's just the start for Reddit? I don't. I'm really am just starting to follow what they're doing now. I've seen them destroy earnings multiple times over the since they've been a public company. They almost like just right out the gate started destroying expectations. But I'm also not a user of Reddit. So it's always hard. It's like buying Snapchat or something like this. However, Snapchat doesn't always destroy earnings, or else I'd be a little bit more bullish on Snap. But I don't use Snapchat at all. And I never understood why anyone would, because you can do a lot of the features that Snapchat has on places like Messenger or WhatsApp and these sort of places. So I never understood it really, but obviously there is a growing user base, and that company probably deserves a premium to some degree, but it won't be like I don't have to bet on it. It's not like I have to bet long or short. I can just not be involved. Reddit, I sort of just treat it that way, just sort of, you know, neutral. But I might get involved whenever companies destroy on revenue the way that they did. I think it was like 20+%. That never happens. On revenue, on EPS, you can do that because you can, play with the accounting and benefit from tax benefits and all these things that can make EPS be thrown off by a wide range. Beating on revenue is tough. Like, that was incredible. I think their EPS, by the way, beat by 135% or something like this as well. So it wasn't just revenue, and then there was growth at all costs. I mean, they destroyed earnings. Reddit has a cult following of users. It's a great platform. I'm still caught off guard with Amazon. No, me too. Andy Jassy did not sound like the Andy Jassy that we listened to, last quarter's earnings. But, that's all right. Coinbase, by the way, I am like, they're down, but I don't think they are down and out. I think that might be a name to enjoy a little bit of a dip from, because I know. So these are some things that I'm very, very bullish on. Cryptocurrency in general. The regulatory movements that have been made for cryptocurrency puts America in the front seat, like driving this crypto train. The Genius Act we saw, Clarity Act will end up getting passed through. That's amazing for institutions to feel like they can develop and invest in these products. And Circle, for example, like stable coins, this will be a massive piece of adoption here, and I am very excited to see how much their stablecoin revenues and these sort of things do whenever volatile or the volume on crypto explodes. What I was surprised from on the Coinbase numbers was how much the market didn't expect the miss. It was pretty clear that they were not going to do well on a transaction revenue standpoint and these sort of things. And then Coinbase is talking very heavily about getting into things like tokenized shares. I think that there could be a future where very many customers end up creating their financial lives through banking, investing, social media, these sort of things, all on Coinbase or on DeFi rails, which will be, the on and off ramp will be Coinbase always. But yeah. Figma, oh my gosh. I'm not that's one of those things where I look at Figma and I go, "Oh wow, that's good for SoFi. That's good for Robinhood and these sort of companies that played a part in IPO access, and the next time that IPO access comes through, there will be a level of arbitrage, right? Because Robinhood can only get so many shares of the Figma IPO. So investors that are headstrong on wanting some capital in new IPOs that end up coming out are going to split their capital between Robinhood and SoFi and other institutions that also have IPO access. Okay. So that I think bodes well for really well for SoFi Invest. They've recently started pushing it and wanting to cross-sell it to SoFi Plus users. That I think bodes very well. In terms of what Figma means for my investments, literally zero, other than what the the excitement in the IPO market means more to me than what FIGMA itself is doing, if that makes sense. Hood's going to go down to low 90s, in my opinion. I mean, it could. It could. If the markets start to get pessimistic, there's leverage on Robinhood, right? Because not only will multiples contract, but the company that benefits on multiples expanding on other companies will contract even further. Now, what do you do whenever that happens? Because I'm a big believer that Robinhood is a long-term winner. And I will be a big buyer if we end up in the low 90s. If we end up getting into August and September, and these are bad months in the markets, and Robinhood flies down, you'll probably see me liquidate my new bank and put it into Robinhood. Because why take the political risk whenever I can, invest in a perfect, I was going to call it startup, but it's $100 billion startup. Their team is like a startup. I've met them. I've met a high majority of the people that work in any sort of high part of Robinhood's team because of the events that they have, right? So if you guys end up going to the Vegas event and stuff like this, which you don't have to be an influencer to go to, they invite just customers there. And I know that because whenever I was at the last one in Miami, I was talking to a bunch of people that were like, I don't even know why I'm invited. I have $2,000 with Robinhood and I don't even live nearby. But still, if there's a way that you can end up going to those events, if any of you guys do have access, I know I've seen some DMs from some of you that you guys are going. Go up to Vlad, say hi. You get to meet these people. And you'll see the culture in their team. They are extremely hungry. So stock price is one thing, and the bones of the company is another. And I think that they have very good bones. I think the structure is amazing at Robinhood. Tanner, why do you go live at these crazy times? You mean like at night? Like at 8:30 p.m.? I don't know. They're hungry vampire people. I think you should meet them. Vlad is such a normal guy for having the status and net worth that he has. You'd think he'd be something that he isn't, but no, he's a completely normal guy. This is the perfect time. I'm done with work and I can tune in. Baba, I'm here for you. Tanner, are you bald? Okay, well, here I might be balding. But overall, I don't have signs of balding. That's the thing. I've got thick hair, but it is receding. That's a bad look. That's a bad look. Bald Tanner is crazy. Oh no. The truth is though, because I've got a long-term girlfriend, I have ceased to care about what I look like anymore. Hymns, you need some hymns. You and me both, brother. Yeah. Let's just call it testosterone, and then we'll go about our day. The hairline is back. The bankroll is up. There you go. Yeah, nothing a trip to Turkey can't fix. You guys are so freaking funny, man. I have given up. I don't care. Look at my hair right now. Is this a style? I literally go to the barber like every time that I go, and I'm like, fix it. I don't have like, is it an order? Do you place an order? I don't even know. I just say, make me look beautiful. And then this comes out. So they're not trying. I'm not trying. And I still tip them. Get married, Tanner, before it goes bald. Yeah, gotta lock it in. Don't tell her that. I mean, you know what's funny is like from time to time she'll bring home like she did this recently where she like got me this hair gel thing. She's like, here. I was like, I think it just went in the closet. I have not used it once. I know what she wants, but I'm not using it. Okay. Sir, this is a Wendy's. Okay. I wanted to show you guys a video really quickly on the great and powerful Brian Armstrong. This is the CEO of Coinbase, and he had a couple things talking about how he runs a business. This is always what scares me, is that even whenever companies are doing well, I always wonder if they're going to slow down. I worry about this for a lot of the businesses that I hold and try to underwrite that constantly. And it always is a pain whenever you're holding on to a business that has been a very fast grower and then started to decelerate, right? I was worried about that for SoFi. It seems like we're actually on the other side of that, and that what actually slowed us down was the Technisys migration, okay? New banking jitters, these sort of things. But listening to Brian Armstrong gets me really excited about that founder mentality that's needed, and that unrelenting lack of, or like just constant hunger to build his business better and better and better without an end.
How do you lead your company?
Well, it's a broad question. I mean, there's kind of the tactical, which is about once a week, I get together. Usually on Mondays, we get together as an executive team, and we just do a deep dive on anything that needs to get worked out and decided. I try to push decision-making down into the organization so that I'm not a bottleneck to things getting done. Like oftentimes we're about 5,000 people now. And in these organizations, as they grow, oftentimes like people get frustrated with, I don't know, there's like 7 people who have input on this thing. No one's in charge. Like if everything has to go up to Brian as the CEO, like you're just not gonna be able to execute quickly. So I try to name who's the decider and push it down in the organization so stuff can just keep moving. Try to have a really high bar for talent. You know, like be very selective on the way in, performance manage people out, make it merit-based. And then, you know, we have a healthy balance, I think, of we're investing in our core business today, but we're always trying to like build the next thing on the frontier. And we try a lot of small bets, and some of them don't work, and that's okay. Like in a lot of bigger companies, you can actually, they get risk averse, right?
Mm-hmm.
Like if somebody tries some new project and it doesn't work, it's like a black mark against them and it fucks up their career. Coinbase, that's not the case. We want people who are willing to try innovative ideas on the frontier with small teams, like, you know, 2 to 5 people. It's almost like a startup within the company. And if they try it and it doesn't work, try another one, you know, and eventually these things break through and you can have innovation happen in big companies that create lots of products that people want to use. So it's not just like we found one thing that works and that's all we're going to do forever.
Absolutely love that. I absolutely love that. Small bets, making bad bets is not something that gets you out of the company. And just, I love, like, it's the same thing why I love Robinhood and why I actually want some form of Coinbase eventually. And maybe this is the dip that I need to purchase, but maybe I can find that at a lower pace if over the next 2 months we find viable dips here. But Brian Armstrong is, so Payu said Bill Armstrong, but Brian Armstrong is a good leader for Coinbase. And in fact, I would actually place him as one of the greatest leaders that I've ever followed. I mean, we'd have to go through a bunch of decisions that he has made. The one that I always look back to, however, was an article that he had written, a letter to their company called Coinbase is a mission-driven business. And you can go back to this like 2020 article and read, or I think it was an internal memo that actually went out, but his ability to dodge the politics, focus on the business, and be not emotional or just do what has to be done to further the success of the business rather than what people are worried about at your own company. And I think that the larger companies they can get bogged down by those types of internal committees and things like this. And I just think I'm never going to see that at Coinbase under Brian Armstrong, and that they are going to continue, even if someone has historically been good at Coinbase, that their job security is not necessarily guaranteed because they've done one great thing at that business, that you need to continue to execute, right? Not for, maybe that's not good for those employees. Maybe that's not good for Brian, but that's good for Coinbase. And as a shareholder, you have to look at buying businesses and hold those entities at the highest regard. And I find that Brian does that better than almost any CEO. He's unbelievable. I just haven't liked some of the bets that they've made in previous times, and I don't know. There's been mistakes that they've made back to back at times. But you see that for Brian. Like in order to get some of the wins, you need to make mistake after mistake after mistake. So, yeah. Corporations and funds that want to own crypto are using Coinbase tech. 100%. 100%. I think the way that Devin Ryan actually said it to me makes a lot of sense. That if there is an AWS of crypto, it is Coinbase. And there's not another name, and it's not Binance, and it's not it is Coinbase. It's quite spectacular. What would we need to bring, or what momentum would we need to bring down the S&P 500 down 5%? Another round of tariffs, another round of potential trade deals that are not going, Trump and Jerome Powell can do a lot of damage together. Okay. Maybe that's what we need in order to get rate cuts. Who knows? I think on the back of these types of things, though, is that artificial intelligence and the tailwinds that we have in humanoid robotics and all of these things are not going to change depending on the types of trade deals that we end up closing. Might accelerate the progress there, but the genie is sort of out of the bottle for the technology that's just been unveiled. Andy Jassy on the earnings call just said that artificial intelligence is the biggest technological shift ever in all of history, and if that's the case, and if it's such a large change that, in fact, you can now make essentially an endless amount of population that has a level of productivity at, 1/1000th of the cost of human labor, it's only going to get smarter. It's only going to be able to do more things. And I do think that it actually gets to a day where you can tell these types of bots to say, hey, you know what? I want to start a new business. Go set up the Instagram account. Go set up the business email. Go set up the website. Do every single thing all in between. Use Figma to design it. Use the tools needed at your disposal, which will have, MCP servers set up so then they can actually tap into these types of products. And we'll be prompting our way through a lot of the monotonous work, and that the decision making will be much more of the differentiation between businesses rather than the manual, just monotonous work that people have to do. Watch Zuck buy Figma tomorrow. I can guarantee you with my whole heart that will never happen. Why would he put zero effort into purchasing a company whenever it was private to then purchase it 330% higher? And he would have to pay a lot more because that's what the market's willing to pay today. Why would he pay anything more than that? He could have applied to purchase that company whenever it was $20 billion, whenever Adobe was interested. And plus, what does Figma have to do with Meta? That's another thing. Why the heck would he want that? Matt Flo, what's up, man? Good to hear from you. Okay. Poll, coin, or Tesla? Oh, I mean, I'm sure most people would probably say Tesla. It still has quite a great following. Tevis, what's up, brother? Tevis in the house. Yeah, I think we'll have to do a video on Reddit. There's only so much watching that type of success and then not taking part, especially in a company that I think I'll be able to understand. Advertising, social media, these sort of things like that. That does seem in my wheelhouse. By the way, I'm so like, I know Amazon fell after earnings, but it had nothing to do with their advertising revenue. Holy crap, guys. Google, Facebook, Meta, Amazon, the advertising dollars this quarter was insane. I'm so excited for AppLovin, so excited for the trade desk. I think App actually ran today, up 7.5% today. And TTD, let's just take a look. Wow, nearly flat, plus 0.6%. I guess the sell side's a little bit better. The market is really linked to Reddit too. That's where crazy ideas and memes come from. I don't care about that. I don't care. I'm pretty sure whenever it comes to like the size of the community on Reddit that makes up Reddit's audience, I don't think it's mostly investors. Isn't that mostly like world news and politics and stuff like this that makes up for it? I'm going to be buying that Amazon dip heavy. You want to come on, Tevis, and give us a 5 to 10 minute on why you are seeing this dip as being a purchase or a buy? I think it is a buy, but I'd love to hear it if you've got some reasons for why you're doing that. NVIDIA is a huge cap weight and everything. Yeah, it's the best company in the most important business in the entire world. People don't realize, like sometimes it's hard to think about the scale in which these businesses are buying their chips. Like Hyperion, which is the largest of the Titan clusters from Meta, is going to be close to the size of Manhattan. A single building that acts as a large computer. It will take you a decent amount of time to drive from one end to the other. There will be roads going through the building. You know, it'll essentially be an entire campus, I assume, but you're filling this with data centers and liquid cooling and just an unbelievable, like private businesses are trying to acquire, nuclear power plants to lower their cost and reliance on an energy bottleneck just to power NVIDIA and AMD chips. I mean, I really do think you need to pick one of those to go in your portfolio. And if you don't, you're kind of missing out on a what could be a multi-decade shift. Did I get any shares of Figma? No. No. I bought more after hours, thought it was good at 230. It's even better at 215. I mean, plus they're, unless you look at it from a price to free cash flow perspective, if you're looking at it on a PE basis or something like this, those also did get reduced even at a similar price target or price range. If you're looking at it from a price to free cash flow, a little bit different of a situation, but as many people know, Amazon has always been very different in that category because they spend a crap ton on capital expenditures. But that's actually what places them first place in the areas that they've been in, right? That's why AWS is the biggest, and that's why Amazon.com is the largest e-commerce site, is because of their capital expenditures, making sure they have what do you call it? Warehouses near people's houses for same day delivery, and they have the largest data centers that actually can facilitate the customers' needs on Amazon Web Services. What about SMCI? Will they benefit? Well, I assume that they will. Now, I don't know if SMCI is a preferred partner for NVIDIA anymore. Now, I don't follow them very closely, but Jensen Huang used to talk about super microcomputers a lot before. Now it seemingly is a lot of HP and especially Dell. Dell's always been in those names as well, but I haven't really seen SMCI's name in a while. And then once they did the provision changes for their earnings and stuff, I just, didn't touch it. What do you feel like has smaller risk, Google at 190 or Amazon at 215? It's a good question. I think that Google, although I think that they will be fine with artificial intelligence, I think that you could have you could put up a bear case. What's the bear case for Amazon? Genuinely. I don't really think there is one. So I think Amazon would be a less risky pick, but Google also has such a low multiple that they probably have a higher upside. So what has a smaller risk? Amazon. What has a higher upside? Maybe Google. Maybe still Amazon. But really, a lot of people said both, and I'm a big believer in that answer. I think that answered your question as well. Amazon versus Google. I mean, the truth is we do get to pick both, but Amazon's probably less risky and still has an insanely high upside. Dude, I will do this, but this is annoying. Thank you, Paul. I will do it. It is in the rules that you can only pick one. I'll pick 3 for you, but going forward, I don't want to pick multiple things. Thank you. I feel both too. Sorry, Sigig. I do my best to answer, but. And by the way, I do appreciate. I do appreciate the donation. Thank you so much for supporting the channel. But pick 3 names: Tesla, CrowdStrike, NVIDIA. By the way, great 3 names. Those are names that I've been known to hold or want in my portfolio. Say says, you never answer me. I don't even see. I'm scrolling up and I still don't even see a question from you. I have scrolled so far and I do not see a thing from your account. I'm not trying to dodge any questions, unless I think that they're just completely uninteresting. then I might switch it, but or skip it. But yeah. So many donations, not even one to buy the SPY. It's because I won't buy the SPY. I won't buy ETFs, individual equities only. Is it time to start a meta position, Tanner? Maybe Microsoft? Microsoft looks insane, dude. The cloud revenue that they're expecting really shows that Satya Nadella has known what he's had to do. I don't follow them closely enough, nor do I use any, other than Windows, do I use any of Microsoft's products. I don't like Microsoft 365. Whenever I was setting some things up online, like very, very small, I wasn't going to Microsoft. Like, I don't know. I like Google's products. So I end up buying Google. I like the valuation, but Microsoft is killing it. Meta is killing it. It's insane. Yeah. I don't think you can go wrong with any of the megs. Well, not any of those four names: Google, Amazon, Meta, and Microsoft. Any other thoughts on Nubank? Not really. Not really. I checked their downloads recently, and they were a little bit lower. Like usually, whenever I go to the Microsoft or to the Apple App Store rankings, that on the finance section, they're usually number 1 or number 2. Last time I went, they were like 7th for some reason. Now, it was that an individual day that I was checking for them, and they were just a little bit lower. Who knows? Let's see. Nubank is 6th right now, and Mercado Pago is still number 1. So, but I'm pretty well positioned for that, holding Mercado Libre, which is the parent company of Mercado Pago. So, perfectly fine with that little dance. But I am interested to see why they are 7th and 6th. Are we going to see a slowdown in potential users? I don't see it in website traffic. Website traffic shows that they are they're going to put up the biggest numbers that they've ever seen. But in the App Store rankings on iPhone, it does look a little bit different than what I'm seeing from the App Store rankings. Right now, they're 6th. What do you think about cybersecurity? I think that cybersecurity is expensive, but rightfully so. They're not going to go anywhere, and the more we use artificial intelligence, the more that they're going to be needed, and the more that they can increase their pricing and everything, because it's not a discretionary spend. It's like legit a requirement, especially in the world that we're going into. So they're expensive, but rightfully so. What are you buying at the moment? Yeah, Google, Amazon, SoFi, stuff like that. ASML lows, tariff reactions. I'm not sure. I don't follow them close enough. I mean, that would make a lot of sense, but might be a good buying opportunity. I don't think that they're going anywhere. I think that they're an insanely strong business with next to no competition. So, why didn't Robinhood go up after earnings? I think just a massive run up to what we had already seen. But yeah, I think that that's pretty much it. That a lot of the earnings were actually kind of front run rather than what we actually saw. But I'm a big believer in Robinhood, and we'll be adding if markets start to get choppy. Hood will go up in no time. Yeah, I think so. Now, if the markets open up worse tomorrow, and we do end up seeing a sell-off, futures right now are looking a tad bit dicey. That maybe that will go to lowering Robinhood stock and allow for some buying opportunities. Spot for S&P 500 inclusion coming August 7th. Thoughts? I mean, same thoughts that I've had before. Hope it's Robinhood. Hope it's AppLovin. These sort of businesses. SoFi will not be eligible just yet. They need to be above $22.7 billion market caps for longer than that. But I do think that whenever they're eligible, they will be a big target. Now, I didn't know if it was August 7th. That could be an individual name that could be looking to get acquired or something like this. If one S&P 500 company is acquiring another, then that opens up an individual slot. Maybe that's what they're talking about. But I did think it was at the end of September because it's on a quarterly basis, but I could be wrong. I've tried to look out for size comment. Like the guy just said, "You don't answer me," and then didn't say another thing. But yeah. ARK bought 60,000 shares of FIGMA. That's a good one. Unless she bought it on the way up. Or I guess, yeah, she could have bought it in open markets. That actually makes more sense than if she got it at the $30 range, because I was like, man, 60,000 shares pre-IPO. That's freaking amazing. I asked when you'll buy Tesla. Okay, got you. I hope to get Tesla allocation one day, but it's not going to be at these price ranges. So let's just take a look. We're at 308. I'd probably want like a 30% discount on that, like closer to 200. And I mean like 200. Then I'd be a lot more comfortable taking a risk on the multiple. Even then, it would still look like crazy expensive. But currently not in it, no. I gave you some Tesla. Yeah, I mean, in my community fund, I might have like, I don't know. I probably have like $100 worth of Tesla. But that's very different than what I have in my own portfolio that I set allocation to. But ladies and gentlemen, I like to get people's opinions on different stocks, like the likes of Amazon, which let me bring this up really quick. But I don't just want to hear it from me. I want to hear it from investors that are even better than myself, like the potential great and powerful Tevis.
Yo, what's up?
How you doing?
I'm doing good. Just had some dinner.
Nice. What'd you have?
How are you doing? I had a little bit of chicken and quinoa.
That's a good one.
Trying to eat healthy, man.
Yeah.
Yeah.
Do you go for breast or did you go thighs? Do you go drumsticks?
They were like chicken meatballs.
Oh.
Yeah.
You probably could have done healthier than that.
All right. Well, it was delicious.
All right.
I just thought I'd come on and say hi to you and your 600 friends.
Yeah.
Pump my TikTok a little bit.
There you go. What did you think about Amazon's call?
I thought the call was shit. I thought the earnings were great. I thought the sell-off was unwarranted. But, you know, when Jassy says that, we don't know who's going to absorb that cost.
Are you eating chicken nuggets?
No.
Is that what you mean by chicken meatball? It's a chicken nugget.
I haven't had chicken nuggets in a while.
Okay.
But,
yeah, sorry. I agree with you that it was the call that made the market definitely lose enthusiasm.
Yeah, I'm going to be buying some tomorrow or doing some cash secured puts.
Do you currently have shares?
Yep, I do. I have shares. I was writing covered calls over earnings on those shares. And I also have cash secured puts that I was having over earnings at like 230, and I'm gonna do more cash secured puts. You got to keep in mind, man, like 30% of my portfolio is cash. So I'm like, oh, cool. I'll buy that dip. Absolutely. Buying a lot of UNH as well. So we'll see.
UNH.
I was telling one of my colleagues today, I was like, man, I think I'm turning into a boomer because like I'm buying a bunch of Amazon, I'm buying UNH. I'm like, I'm not buying, $5 billion scrappy startups anymore.
Yeah, the truth is like the big names are the strongest names in the AI revolution as well. So it's hard to ignore them, even
Yeah.
though they are some of the most expensive names. Like we could have $10 trillion companies into the future. Who doesn't want to bet on a company that's even at $1 trillion? Like Meta still might be one of the picks. Amazon might be one of the picks still,
Yeah.
with an incredible margin of safety.
Yeah, they just have resourcing. And I think, one thing that Amazon is doing, I saw somebody post about this, is like you have all of these magnificent sevens doing a ton of buybacks to essentially make their numbers look good from an EPS perspective. And Amazon's just doing like no buy. They're just putting it all back in research and development into expanding as fast as possible. So I thought that was interesting.
Yeah, yeah. Definitely a lot more warehouses and chips that they.
Yeah, exactly.
And the custom silicon talk, I mean, they can all talk about how they're getting custom silicon and everything like this. Oh, we're lowering our reliance on NVIDIA.
Mm-hmm.
And then NVIDIA is going to end up showing off earnings higher than we've ever seen before. And we'll realize that it was all just talk. And that
it's crazy because like NVIDIA pumps on the back of all of these Magnificent Seven because they all mention it. And like, dude, the fact that Meta went up 12% was baffling. I think that's one of my biggest regrets is not buying Meta when when Brad Gerstner wrote them the letter and then they basically cut their head count and they're like, we're going to focus on actually not screwing over our investors and not spending so much money on the metaverse. That was the signal where you should have bought because it's up like 7x since that point. And
yeah,
it's just the juggernaut, man. It's a monster. Mark is absolutely an amazing operator, and I don't think anybody can argue otherwise.
Yeah, I think it might even be more than 7x. I think we're getting closer to like 8 or 9.
Yeah.
On one of the biggest companies in the world.
Yeah.
But yeah, we like, I was going to talk about it. I don't know how I got distracted, but about their build outs, like the Hyperion and, here, let me bring this up.
On Meta?
Yeah. Yeah. The
Did
buildings.
You listen to the call?
Yeah. I listened to the call.
Oh. I mean, I don't own any, so I didn't really listen to the call. It was just the reaction was insane. And it like brought up the entire market too.
This is one of their new data centers. It's going to be the size of Manhattan. Like,
it's wild.
This is insane, bro. This is one of them. So they also have Prometheus. They also have a bunch of their other Titan clusters that are going to come out, about 5 in total. Now, none of them are going to be as large as Hyperion. But like, this is one company of many that are building these buildings that are the size of some of the largest metropolitan areas in the entire world.
Yeah.
It'll take you a long time to drive from one side to the other. And it'll be stuffed full. I think it's 26 kilometers or something like that. It's like, we're talking about a building, a campus.
Yeah.
It's insane, bro.
It's crazy, man. Because like, I know you can get all of these massive, 10x here, 5x there, but it's like, dude, like Meta, which people would argue is the most boomer, like the most boring type of like, oh, Mag 7, like that's not exciting. You're not going to beat the market. Like it's up 29% year to date, Yeah.
Freaking hilarious. But yeah.
Right?
No heaters required. Actually, quite the opposite. You need a lot of cooling.
Amazon's going to be flat after it opens. Like if it opens down 6%,
Sorry, what's a kilometer?
0.6 miles, something like that. Yeah.
Is it that way, or is a mile 1.6 kilometers? I know there's a 6 in there. I just don't know what direction.
No, a mile is more than a kilometer.
No, I know. Is a
We're saying the same thing the other way around, right?
no, that would be a different formula. 2.2 kilometers in a mile. Okay, so then not 1.6.
No, I said 0.6. 1 kilometer, 0.6 miles. It doesn't matter.
You said we're saying the same thing. I did not say what you said. I was wrong. You were right.
Okay, cool.
Yeah, you were right.
Yeah. So, like I was saying, Amazon after the drawdown after hours is going to be flat year to date. Tanner, how do you feel about this?
They'll be flat year to date.
Correct.
I feel like I'll want to buy some.
Even slightly down year to date.
Yeah, I mean, if they end up losing in cloud for some reason, then things will turn sour on Amazon and the bull case will be lost. I don't think that people are just buying the e-commerce giant that is Amazon.com. What people also want is an infrastructure layer for artificial intelligence. Now, how many data centers have they set up that are more CPU based, that are not really going to be a factor in artificial intelligence?
Your chat is getting so confused about this miles kilometers conversation. Like the reason why I said both answers are right is it depends on how you base. Like 1 kilometer is 0.6 miles. 1 mile is like 1.6 kilometers.
No. You are wrong.
No.
1 kilometer or 1 mile is shut up, bro. 1 kilometer is 0.6 miles.
Yeah.
Okay?
Now
But
1 mile
is
1.6 kilometers.
No, 2.2. I was wrong.
All right.
I was wrong. 0.6 does not lead to 1.6. That's wrong.
You really do this shit on your live stream? Share my screen, please.
Okay, now turn it the other way around. Turn it back around.
Are you done?
I'm done.
Thank you.
That's what it was. A kilogram is 2.2 pounds.
Oh my God. All right. So now 600 Americans, which presumably they were Americans, they learned something.
My bad. All the donations are going to Tevis. I don't deserve it. I'll take the L.
Oh man.
Okay. I knew there's something that converted to 2.2. I knew that for sure.
Yeah, I would go Google over Apple, and I would go Amazon over Google personally.
Google over Apple, Apple over Amazon?
No. Stack ranked top to bottom, Amazon, Google, Apple. Apple at the bottom, Google.
Do all seven. Do all seven.
Tell me the 7 again.
Tesla, Meta, Microsoft, Amazon, Apple.
For what?
NVIDIA.
12 months?
Whatever you want to hold in your portfolio. You decide the timeline.
What time frame?
How do you invest?
I don't know. So Apple's at the bottom of the 7.
Okay.
NVIDIA's at the top of the 7. Amazon's towards the top. I would say Google in the middle. Meta higher than Google. I would say Tesla. Well, I mean,
Everyone's brains right now, like trying to visualize.
Yeah, they got really confused on the. We should do like a full like Canadian to American conversion episode so that people can actually learn something. Who am I kidding?
You don't need to learn it.
You don't care.
Okay. But that being said, here, wait. What I'll do? You keep telling me about your little formula here.
Yeah, Fahrenheit to Celsius is one that I have no idea. I think boiling or freezing point is what, 37 Fahrenheit or something like that. That's the one that I have no idea on.
I think it's 32. I'm confident.
Okay, yeah, let's not play this game.
32 degrees Fahrenheit is
Is zero?
freezing. Yeah, is zero.
Yeah, 32.
32.
See, like
And there is some formula like this. There is some formula to like each and every Fahrenheit move is equal to Celsius.
See, like way more people know the Fahrenheit Celsius conversion than we saw people know the kilometer to mile conversion. That's interesting to me.
No, it's not that they know the conversion. It's just they're American, so they know what is freezing. Like they go outside.
No. They say 32 equals 0, 32, 32. Like,
Yeah, all the people saying 32 is just because they know that it's freezing. Now ask them what the boiling point is for Celsius. None of them know it.
The boiling point for Celsius. No, none of them probably know it. Man.
You know?
Yeah.
So negative 48 Fahrenheit is negative 38 Celsius. Yeah, there's some weird formula. No clue.
No, what's the
Yeah, okay. A bunch of you guys went to Google. I get it. Okay. Yeah, it's 100.
Oh my god. Bro, what is this conversation even?
Oh, we're just having a good time.
212 on Fahrenheit boiling point? That kind of makes sense.
212?
I don't know. I mean, if it was 1.8 as like 1.8 to 1, then it would kind of make sense, I guess.
My sauna is like 165, something like that. 165, 170. That's all I know. And it's not in Celsius.
Yeah, obviously. 165 Celsius, Tanner's turning into fucking goo. Cool. Yeah. Robert says, dude, who cares? Ask him about Amazon Cloud. Yeah, I mean, look, I'm still going through the earnings. We had so many good companies just report like over the last 48 hours that it's I'm still trying to digest like Robinhood earnings, let alone like Amazon and that just.
You're a shareholder there as well?
I am a shareholder there as well, yeah.
And what did you think?
I thought it was great. I mean, good revenue growth, gold subscribers, 76% year over year. Like net deposits were pretty good. I didn't catch the call. I know that you guys were covering it. I know that you guys all asked questions, but
I didn't actually. I didn't raise my hand in the queue on accident, so I didn't get a question.
Yeah, I think it was. I think it was good. It's interesting because like people are like, oh, like Robinhood's growing so much faster than SoFi, blah blah, and that now as of this last quarter, it's like, well, SoFi's like what 44% and Robinhood's 45%.
Well, yeah, I mean that's one quarter. We'll have to see.
Sure, like. Yeah, okay. It's one quarter. I own
one has
both.
a rule of 40 of 73 on an outstanding quarter, and the other one has a rule of 40 of 112. So they're not equivalent, but yeah.
But since when did rule of 40 become the freaking metric? Rule of 40 is like a private equity KPI that they measure SaaS businesses by.
How do you want to measure them?
Yeah, but like
member growth? SoFi has them if you're looking at member growth.
Sure, but like technically, like you can judge everything through the rule of 40 measure. It won't be applicable to everything because like I don't know. It's just like I think looking at the top and bottom line growth as a very baseline, like rudimentary metric, right?
Yeah.
I like PEG ratio. I don't know what Robinhood's is. but I doubt it's more. I doubt it's better than SoFi's.
I would venture that bet as well.
Yeah.
The problem is that the analyst community has such a hard time guessing what Robinhood's growth rate is going to be because it's really dependent on the market.
Right.
Real quick though, let's just quickly head to Canva. Can you rank them, please?
These are the Magnificent Seven.
Yeah, Apple needs to be lighter.
This is how you do it?
I could just lower the saturation. I just like jacking everything.
Dude, why do you do it like this? I'll show you another way after.
I could just take the saturation. I could just remove the saturation. I just like to brighten it.
Anyways, doesn't matter. Okay, so it really depends on what the time frame is, Tanner. But sure, we'll put NVIDIA towards the top.
NVIDIA towards the top?
Yeah, around there. And then Apple at the very bottom.
Apple at the bottom.
Yeah. And I'll put Google above Apple. I'll put Microsoft above Google. Oof. I know I'm going to piss people off with that one. I'll put
Hello?
I'm thinking, dude. Calm down.
Dead air, bro.
I'll put so put Meta and Amazon side by side under NVIDIA for now.
Meta, no, you don't get side by sides.
Just for a second, man.
Meta and Amazon side by side below NVIDIA?
Just for now, yeah. I need to figure out where Tesla goes because that's like the wild card. Like the fundamentals are crap, but like the story is good, and I think they're gonna pick back up. Yeah, roughly. But
pick a direction. You got to pick. Come on.
Okay, what are we measuring here? Like growth rate?
Your favorite companies to hold in your portfolio.
Oh, my favorite companies to hold.
Yeah, well, stocks that you think are going to make you money, of course.
I'm not trying to guess. Like, I'm not trying to predict the growth rates.
Well, I sure hope that you are to some degree if you're investing in them.
Okay, well then put Meta under Amazon. And
Meta under Amazon.
If it's my favorites, then I'd probably go like that. And let me just take one last look. Honestly, can you flip Google above Microsoft?
Google above Microsoft.
And then maybe flip Google above Tesla too.
Google above Tesla.
Yeah, let's do that. I like that.
There you go.
Yeah, I don't know. I think that might be it. Or the only thing I'm thinking of right now is like, what do I want to switch in the top 3? But I think that might be it. You know. Oh my God, you're gonna make like a reaction video and like, oh, this is what this idiot picked.
This is my next thumbnail.
Tevis picks, and then on the other side, correct order.
Wait, why didn't that switch?
Yeah. How does the chat think of this rendition?
What do we think?
What do we think, chat? Do we like it?
Microsoft up from Tesla. They're pushing Tesla even further down. I like the top 3. No, Microsoft above Tesla. Tesla is trash.
Yeah.
I like it. Awesome.
Tesla,
Google needs to be much higher.
Microsoft is way too low. Earnings were amazing. Yeah. I mean, I don't disagree with that. I think Tesla is definitely below Microsoft right now. But if I'm looking from like a long-term perspective, Tesla has some explosive upside potential. if and when, and big if the fundamentals actually materialize. But if they don't, then yeah, like Microsoft, I think is slept on by a lot of people. I don't know. It's so tough, man. Like they're all amazing companies. Well, okay, so now you do your rendition. I want to see. Like put it on the other side.
Well, okay, I was going to put Tanner. Anyway, I will do. Yeah.
Yeah, that's what I thought.
Somewhere Google or Amazon could be interchangeable. Honestly, I think that Google, for me, yeah, might do this just for now. I do love me some Amazon, but they're so close. Honestly, I can't even pick.
You're keeping NVIDIA at the first? Yeah.
Of course. That's without question.
It's crazy. Like the easiest choices for the both of us were like NVIDIA at the top, Apple at the bottom. Now let's debate the middle.
And honestly, this might be like this for me.
It could, yeah, it absolutely.
But I just think that Tesla's long-term future could definitely have some interesting things.
Well, yeah, exactly. That's the thing. It's like the unknown factor of like what could Tesla potentially do.
Okay. And then once we put SoFi in, where do you put that? You probably put it number one because you're a shill.
Stan.
A stan. I'd still have NVIDIA number one, but I did buy more SoFi.
If you asked me where would I put SoFi, I would put it number one, right underneath HIMS.
Wait, say that again. You put SoFi right underneath HIMS?
Yeah.
Where does HIMS go?
At the top. I think HIMS
SoFi, NVIDIA.
Well, no. I mean, it depends on what we're doing. Like, it depends on what we're doing, man. Because like NVIDIA is what, 4 trillion now?
4.3, 4.4.
Yeah, like HIMS is 10 billion or 13 billion, 15 billion, whatever it is now. Like moves up 10% every day. Yeah, it's 15 billion. Like if HIMS goes to do a 3x or 4x in the next 2 years, like NVIDIA is not going to be able to keep up with that. So like you're apples to oranges at that point. Mag 7 is kind of like you're in the same ballpark, roughly speaking, the trillion plus market cap. But yeah, if I'm looking smaller cap companies, I think HIMS has a higher upside potential. Obviously, I think SoFi is like the steady Eddie, safer pick. Like they won't throw up a bad quarter. They're compounding their growth. They're doing amazing. I just don't necessarily know like feasibly where that can go. You know what I'm saying? Like I know it's like, oh yeah, SoFi to 100, whatever. But it's a much larger company than HIMS is. SoFi is what, 25 billion, and HIMS is like 15. And HIMS has already run from $13 to $66, and it's still only 15 billion. And so I think that's the framing that I'm really looking at it from, is saying, well, I think that HIMS can go from 15 billion to 100 billion. And I think SoFi could go to 100 billion, but you're starting off of a much higher point from that perspective.
People were looking at the side of my head here and saying that I need to be the next customer of HIMS. So,
Yeah. Well, you got to start, like, it's so frustrating to me that you're not in the stock, like actually in it. Yeah,
but that honestly, I don't feel like I'm missing out on it, to be honest. I just it's in a space that I don't want to be in.
Yeah, that's fair.
Might get into Reddit though. I don't know. I need to listen to the call. I need to do this
money, bro. Like Reddit, it's a forum on steroids. I don't know how they make money.
They beat revenue by 22%.
Ad revenue? How do they make money?
Ad revenue. Ad revenue. And now supposedly, I just read a small tidbit, like they signed some crazy deals with OpenAI and other LLMs to train off them and stuff.
It's interesting.
But yeah,
are you buying Figma at all? Or like, is that interesting to you? Like at obviously a lower valuation than it is right now?
I mean,
well, let's take a look.
Yeah, there's a valuation to be paid for a tech company with great growth, but I'm not in the space. I don't know how. I don't know, man. I don't know. ChatGPT is coding games, and
yeah,
I see bear cases all the time on Shopify about how like you're going to just be able to tell it to go make a website and everything like this. And if you're able to do that and put a bear case up against Shopify, why can't you do that versus Facebook? I just don't know the space enough. So I'd need to do a lot of research, which I haven't done. So
yeah, well, so okay, I have sort of opposite senses. And by the way, Figma's up 24% in after hours trading. So kind of crazy. Well, okay, can I just go on a little rabbit hole? Like, how the hell was it so mispriced by the bankers who took this thing public? Where they were
it
like,
wasn't.
You think they priced it low on purpose?
No, I don't think it was priced low. I think that the market has gone crazy.
Oh.
I think we're just in.
Bro, it did a 4x on day one.
Do you know that he has a compensation package that if he hits the stock price hits $100, like similar to Elon's, where if it hits $100 over the next 10 years, that he'll make this crazy like $200 million payout. It hit it in day one.
Jesus Christ.
Like, so is every banker and underwriter and Adobe that tried to purchase this 2 years ago or whatever it was for $20 billion, and they said yes?
Dude,
like,
I was looking at Figma on the private exchange, and it was like $20, and I was looking at it like literally 2 weeks ago, and people were selling their own shares for like 20, 25.
Yeah.
And I was like, God damn it. Like I told my friend today, I was like, I should have just bought it there. Those people sure feel stupid now for selling it like 1 week before it went public.
Yeah, so I think there's just a lot of mania right now in the IPO markets. I'm sure Figma is a great business, but like that is a crazy margin. Obviously, the bankers are kicking themselves.
Mm-hmm.
The CEO is kicking himself. The company could have done such a much bigger raise at such a lower amount of dilution. But who would have known that this is what was going to happen? Until all the papers are already signed and it's already 40x oversubscribed and everything like this that we saw later on. But I don't know.
It'll be interesting now as well with like the tariff news that dropped after hours of like, okay, well, is this the thing that's going to pull back the market a little bit and like throw some cold water on the rally?
I don't think so at all, dude. You know what I'm super excited for?
What?
This is also what I'm getting excited for. SoFi. And what do you think Notion and Stripe and all these massive companies that just saw what Figma just did? You think they're going to go, oh, you know what? This is not a timed IPO. The amount of filings that are going to go out in the next week is going to be insane.
Yeah,
insane.
I agree. I don't disagree at all. But like, you know that companies IPO during exuberant times. And so like that's a signal. Like the number of IPOs is heavily correlated with the the returns of the market because they want a higher valuation. So if you're looking for signs that the market is running hot, yeah, lots of companies an IPO. It's talking to you.
It might be a time to do that, but I think companies like Robinhood. This is why I like the brokerage space so much.
Mm-hmm.
Although whenever it starts to crash, they will make less earnings. The earnings that are made during those times will not fluctuate. Like, so we have to separate the difference between a stock and a company. And the company will make real earnings during these exuberant times that they can just put in the bank. Yeah. And during those worse off times, they can buy back stock. They can invest in better technology. Like the exuberant times like this, the meme manias, the IPO crazes make real differences to Robinhood. Like the bumps in open door stock or something like this, unless they did some dilution, I didn't read about it. But from my understanding, they didn't really take advantage of that bump. I don't think. I don't know if you know something that I don't. But
No.
Robinhood did benefit off of those bumps.
Right.
Also, did you see? Wait. I got to show you this. Robinhood has a share buyback program. Okay. And so each month, so from April 1st to now, they had to buy back a certain amount of shares in order to keep their stock like flat or whatever.
Oh yeah, the $42 average price.
Yeah, like $41.
Yeah, insane.
So this was their ability. This was the timeline that they could have purchased in.
Yeah.
And their average was on the line that I've drawn here.
Yeah.
So they had to either purchase in this little dip or in this dip here. And that was it. And they bought like, I forget what, $100 million or something worth, $200 million.
Crazy. And like,
so if you make a company with a bunch of stock traders and day traders and stuff.
Well, yeah, like retiring those shares essentially, and then it like what 2.5x from there. It's just it's wild. So absolutely, and like that, I think that's one of the bull cases as well for UNH is like all the buybacks that they're doing, and how that's going to affect the EPS growth over time. Because like this quarter was like kind of a sandbag because the stock has fallen so much, like from 650 to 250, and probably will keep falling until 200, quite frankly. Whereby like institutions are buying in, insiders are buying, and the company is just buying billions, of their own shares. Sorry, not to like switch the topic from Hood, but like it's opportunistic repurchases of their own shares that then help the company, not only from an EPS perspective, but also from like saving on future dividends that they would have to pay out by buying the shares drastically on discount from what the mean is.
Yeah. Some people saying in chat that they don't want as Tevis put it accurately, an exuberant market, but you don't get to really choose how hot the market is. The companies that want to take advantage of that, I do actually think that is a good thing. I've always been of opinion that I want every company to be public. I want the most amount of transparency, the most amount of comps, the most amount of companies to be able to research and bet on.
And keep in mind that like all of these companies have thousands of employees that have been working for many years for this day, because this day marks a liquidity event where their shares turn from magical monopoly money to things that they can actually pay their rent with. And so like if I'm working at Stripe or if I'm working at, FIGMA, for example, like I'm popping bottles on the day that they IPO and the stock does a 4x, because all of a sudden I can just sell on the private or on the public market, and my shares are no longer like just a piece of paper, or I'm not just a name on a cap table anymore.
I'm sure there's some lock-in right now, but yeah.
You get like once it is a public company, I mean, you can sell.
Yeah, you'd get freaking excited right now that you're going, oh, honey, I've got almost $1 million worth of stock that's about to go public, and then it actually does, and you go, babe, I've got $4 million in this stock.
Yeah, exactly.
That's like, got to be crazy.
That's the reward, right? You put in all of that work. It's delayed gratification, and the moment that you go public is you dumping all your bags on retail, and like, congratulations, you can do that because you're an insider. You helped build that company to get to that point.
I don't think they all quit. Imagine they all sink the stock because they all think they're millionaires, and then
that was like
crabs out of a bucket. You kind of like cause yourself to crash the stock.
Yeah, I made a post that was like almost exactly like that. As it's breaking, all FIGMA employees are quitting on the back of this 4x. It's I mean, obviously there's a lockup period, but it's still great to see. And like, it helps us too, right? Because it just allows us to have more diversity in the stocks that we research and where we can allocate our money. Like there's more opportunities out there. If you're saying, I don't like an exuberant market, well, if you have double the amount of names or triple the amount of names in the market, then you can act accordingly because there's more things there's more potential opportunities for you to capitalize on. So the exuberant markets are needed to coax these companies to go public, so that then you can take advantage after the euphoria dies down, right?
I'll need a little bit to find this study, but I'm pretty sure we're actually at a period in time for which we have like the fewest names that are actually public right now. Something
Because
along
there's
the
no utility. There's very little utility in a company going public right now because there's so much liquidity on the sidelines and through private equity and all of this stuff. And this is like what Vlad talks about with tokenization as well. Like, what is the benefit of these companies going public when you can have a SpaceX command 300 something billion dollars as a private company and not be subject to the scrutiny of the SEC that public companies are under, right? So they can have their cake and eat it too. They can get the best of both worlds by saying, oh, well, I need to raise money. Easy. I'll just do a capital raise and it's oversubscribed because it's SpaceX and I don't need to go public. I don't need to disclose or be beholden to the shareholders' whims or any of this bullshit, right?
Yeah, we have so there was a big increase in the amount of public companies in so total US listings in 1996 and 1997 was over 8,000 names, but we've always hovered around 5,000. Today we're at about under 5,000, about 4,000 or so. The lowest we've seen is just under 4,000 US listed stocks. But yeah, I've seen similar charts like this before. I don't know how accurate this one is in particular. But I have seen similar reports. So the fact that I found an article on this pretty quickly does show me something. But it's in this dark black here, which is the U.S. listings, not including all worldwide stocks.
That's interesting. Like after 2000, basically, like it just permanently dropped, whereas the rest of the world is still doing it.
Yeah. Yeah. And another big rise was in 2021. And maybe that's again right now. I mean, we are seeing a lot of IPOs, but a company like FIGMA going public and doing 300+%. And honestly, that actually makes me think, like, do you think that this is somehow institutionally driven to, I heard similar thoughts about Circle. I heard comments about that and on how they kind of all coordinated together. Devin Ryan just said this on Amit's podcast, where he said like institutions kind of work together to keep it high for their clients, something along these lines. Do you think that they potentially had overbid or this stock up to try to re-engage IPO market, something like this? That's a little conspiratorial, but
it is conspiratorial. I mean, the other thing to keep in mind is like, well, the lockup period is what, 3 months? Generally, it's 90 days. And what you'll notice with a lot of these IPOs is that they won't maintain that elevated price for 3 months. Now, does it fall? Does it peak at 150? Does it peak at 200, 250? Like, who knows? But I think with the risk on appetite, like Figma being at 85 billion after hours is quite frankly kind of insane if you look at it from a valuation perspective. But if you look at it from like, ooh, shiny company, it's a sexy product, I'll want to buy it, it's only $150, whatever, like the whole like retail mentality, somebody's going to be left holding the bag on it. Like, it's just the reality. And I can say that with that degree of certainty because somebody's always been left holding the bag buying on IPO day, myself included on some IPOs, quite frankly. And so you don't know when the other shoe is going to drop, whether it's going to be tomorrow or next week or next month. But at some point prior to the 3-month lockup period ending, this thing will not be trading for $150. And maybe it might be, and I might eat those words, but chances are it won't be. History tells us it won't be.
Maybe it's 250. Bro, the after hour markets is like the fact that it continued to climb another 24% is just insane. But I'm going to continue to bet on the SoFis and the Robinhoods to take advantage of all this, volume. and not have to worry about whenever it drops. Because whenever it drops, Robinhood's additional revenue from these types of trading will go down, but the money that they've made will be permanent. And SoFi is going to be a big player in this as well. I don't know if you've seen them pushing a lot of the, not only the IPO stuff and being a part of FIGMA as well. I also had a talk on here that whenever Notion or these sort of players start coming out, I honestly think people are going to learn from the only one share at Robinhood. Like, I don't know if you saw a bunch of those, like people getting allocations.
I was just about to say that. I think Robinhood got a bunch of bad press today, actually, because so many people were pissed that they, wanted to get a bigger allocation. Like, I signed up for 1,000 shares and you only gave me one share. What the heck, Robinhood?
Those are literal idiots. It's 40% oversubscribed. So
yeah, no, I understand, but I'm just like,
no, I know you get it, but that's just the nature of secondary markets. Okay. Like Tesla puts out 1,000 cars up for sale. 50,000 people want them. They can only give out 1,000. And then people go, hey, what the heck? I came here for a car. They're sold out, bro. I don't know what to tell you. The 40 times oversubscribed, 39x of those people that wanted Figma shares didn't get a single share. So I don't care how many you asked for. You only got what you got.
Which is crazy because, like, whatever shares you got, it's like Robinhood just gave you some free money right there. They're like, here you go, one Figma share for $33 that you can flip immediately for $150. Congrats.
So what do you think? Do you think that syndicates get larger during this time, or do you think that they buy less next time? That they worry that like,
what do you mean syndicates? Like
whenever a company like Figma is going private, they have to. They're not selling their shares to the public; they're selling it to banks, and then those banks cut it up and sell it to us. They're drug dealers.
No, I know what a syndicate is. I'm just saying, like, those people generally buy in the private markets. Like, the people who are holders of Figma are the equity backers and the growth funds and all of these Silicon
No,
Valley
not whenever they're going public. Not whenever they're going public. They're like, okay, so there's a bunch of people who get Series A, B, C, D, everything like that. That's not what I'm talking about. Those are direct relationships to the company in those private rounds. But on the final series, they're public.
The ones who take them public.
The ones who take them public. Usually it's so many shares that an individual bank is not willing to take on that much risk. So a JP Morgan will go to a Bank of America, a Citi, a Barclays, a Goldman Sachs, a SoFi, a Robinhood, and say, hey, can you take on some of these shares so we can split the risk and the reward? So they're like public syndicates. And they get larger and larger depending on the IPO. So like if a Stripe or these types of companies go public, you're going to need a lot of banks. Because they like no individual company will take on that much risk. Because if they end up going and it's not 40x oversubscribed, it's actually undersubscribed. JP Morgan's like, all right, I guess we're holding these shares then.
Yeah. So I don't know if it gets bigger or smaller. I think So I think a couple things. Just thinking about this out loud, I think that I don't think they see these high profile names as individual use cases. I think it's mostly like they're a data point in a series of data points around how do they generally perform and whether like what range do they generally go up or whatever. And they use that to determine what their risk is for how much money they want to, take on. I also think that the companies that are doing this and partnering with these banks, like it's such a diminishing value proposition to continue to partner with these institutions to take you public. Like just do like a direct listing or something else where you can actually keep more of that, more of those potential rewards, right?
I don't really know how DPOs work, to be honest. It clearly is not very favorable. Or not very fair. Sorry, not very. It's not chosen very often, and in fact, SoFi went as far as to not even DPO, not even IPO. They SPAC'd onto the market because he said that was the most favorable thing for their business.
Well, yeah, I don't know.
That's from a guy who used to like if someone knew a way onto the markets, it would be Anthony Noto. He used to do that for a living. IPO companies onto markets. Why wouldn't he DPO?
So again, I don't know the like intimate details of that process. My point is like if there was an alternative, with the liquidity that we have right now in retail markets, that's unprecedented, quite frankly, with like, all the money printing and just where we are right now with markets at all-time highs. It would benefit these companies individually to not give such a large slice of the pie to the
Sure.
banks that take them public, because largely over the past 20 years, we've moved away from this middleman type of economy in finance. We've gone direct to the consumer and skipped a lot of the, red tape throughout. Yes, banks are going to hate it because it's an existential risk to that side of their business. But obviously the companies don't love this predicament, because like a bank can, or an institution or a syndicate can just hold them over the coals for a large allocation or a large chunk. And if they had the option to go direct, then why wouldn't they choose to keep more of that reward, right? Maybe a DPO is not it. I don't know what the answer is, but my point is like there has to be something in the modern day. And quite frankly, maybe it is this tokenization thing that Vlad talks about.
Yeah. All I know is I think people who will want more shares from Figma, if that's to be addressed, it might be one of two ways. SoFi and Robinhood for big IPOs, like Figma, big. Another large tech name, I think people will know that it'll most likely be oversubscribed because the hype is there. Will they end up going to the JP Morgan, like the big banks that are setting this up, the Goldman Sachs, the Morgan Stanleys, and say, hey, you know what, we actually want to buy even more this time, because they have all these customers that really do want them. If retail's really hungry for IPOs, Robinhood and SoFi can make a lot of money doing that.
Yeah.
So maybe that's one way. But another way, honestly, I think a lot of Robinhood users might go to the likes of a SoFi or a public M1, whatever companies are also doing IPO access. I actually don't know of many other than SoFi and Robinhood, and split up some money to ask for shares from both. So then they almost like arbitrage it in a way.
Well, go one step further. Like, is there a business to be had here to build an aggregator for all of these different brokerages for you to actually get a bigger allocation as an individual?
And you probably don't even need to do that. You probably just need to go to an investment bank. They'll do it for you.
Yeah, I guess.
But
anyways, I have to go. Got to go to the gym at 10.
big man.
Yes.
All right. Kill it, ladies and gentlemen. Please check out the great and powerful Tevis, as you can see, at Fun of Investing on X, YouTube, and TikTok, where he shows off his dance moves.
Hey, man, my only Figma video that I made today was on TikTok. And so if you want to hear me talk about Figma, it's only there exclusively on that platform.
Tevis is going. I'm not going offline, ladies and gentlemen. I'm still here.
No. I'm out. Thanks,
He's
everybody.
a quitter. I'm here to run the marathon.
Yeah.
Thank you, though, brother. I appreciate you.
You have a gym in your house, so
What?
You have a gym in your house, so you can go whenever.
Damn straight.
Exactly. See you all tomorrow on FinTech Friday. Check out my video. Check out my TikTok. Okay, bye now.
Peace, brother. Yeah, call Steve. Yeah, on to the next one. Okay. Robinhood, by the way, ended up down 2.8% on the day, down another 2% in after hours. This is going to be a weird time, especially like will companies want to IPO into a heavy tariff situation? Maybe not, but either way, I'm going to stick around and see what has to happen. I think Robinhood's going to be a good place. SoFi is going to be a good place for these types of bets. Very, very happy camper. Man, Amazon Web Services, now $124 billion run rate business. Jared, thanks for the dollar, man. Tomorrow might be a rough day. Yeah, it could be. But, if you're a long-term investor, you have to continue to sort of play in that environment. It can't always just be, 15 green days in a row, right? What makes an investor is the ability to buy the dips, stomach the downturns. It's easy to stomach the stocks going up. That is the easy part. That's playing the game on easy mode. The hard part is these types of moments is whenever people get a little bit worried or worried that their gains are at risk. And then they want to close and they want to make quick moves. And, oh, now the apocalypse is happening. The next couple months are going to be terrible. Whenever Monday or whenever Friday or Monday markets open, I'm going to end up selling everything. I'm going to be a genius. The problem is that if Trump potentially rolls back some of those, they actually do get some trade deals, and then the market gets excited again. And then you lose that potential for continued gains in a lot of these AI moves. So it's during these times that if you are a long-term investor, if you have similar aspirations as to what I have for my investing future, is that you continue to hold even whenever it might not feel comfortable to hold. Don't sell the winners, says June. Many new investors fall into that trap. Yeah, I mean, seasoned investors know that exact feeling. Every single time that this happens is that people go, oh my God, I've made a ton of money. Now it's my time to capture that, watch everyone else lose money, and I'm going to go in with my new added gains and buy the dip and double my shares. And then, take the escalator to the next level. And then what ends up happening is you end up selling. It was a false alarm. And then the train goes on without you. And then you buy in at a higher level with less shares than what you would have originally had. That's the problem. And you lose a lot of new investors that way. And then people think that it's a rigged game and that you're up against smart money and the only people that win is them and you lose money. Not true. They did a study and the best performing portfolios are the people who have died. Yes, they don't have the ability to sell. Patience pays. Yeah. I think so. Okay. The will to act equals win. I think maybe the will to not act. I think that's more of the Warren Buffett approach that he's been trying to sell on people, is that too many people try to make too many decisions, and you don't actually need to make that many decisions. It's funny that I go live every single day when really I go live every day to go, hey, guys, maybe we should stop making so many moves. But I do like following the news every day and gets me interested, and I learn about a lot of companies, and it changes what I buy, but I am an active buyer rather than seller. So if I die, my portfolio goes up. I think markets go up. You just were sort of in the way. I think that's more the use case. Humans are just not that good at investing. They can't visualize compounded growth. It's like one of the hardest things for investors to sort of learn. And we get in our own way. We get in the way of entrepreneurs that are truly changing the world and making big differences. People, think that Amazon is going to die because they post a quarter and then say a couple words where investors might think that they're losing confidence in cloud, and then disregard all the other changes that they've been making in their organization. So we get this massive discount. Like the cheapest we can get this stock during the year, like we've just erased this entire year's worth of gains. Yet they've continued to push into artificial intelligence. They're doing all the right things in terms of capital expenditures. They're expanding and getting huge brand deals, getting, satellites into space to offer the best pricing for internet at the fastest speeds for only Prime users, like all the things that you would want and go, oh, of course. But yet the stock's down 7%. So people did lose faith in Amazon today. Stocks can go down. Yeah. We all know that stocks can go down. It's just whether you want to hold them whenever they go down. That's people try to get a little smart and they try to get out of it. Let's see. Bro, can you talk about FICO? What happened there? I have no clue what's going on with FICO. Did they report today, or did they have to, or were they, aren't they reporting another day or whatever? Or was that yesterday? I don't follow Fair Isaac at all. To be honest, Amazon has never treated me amazing. You got to look out a little bit and see the trajectory that they're on. Realize that although the capital expenditures make their, actual cash stack not look as exciting as what it could be if they just saved a little bit of money from time to time, they are the world's biggest startup. And I do think that they will win. How long should you hold a stock? Well, I think it depends on when you need the money. If you were to ask Warren Buffett, how long should you hold a stock? He would say a lifetime. You can write covered calls and make money from a stock along the way. And so if a stock 10x's, 100x's, whatever, the income that you can make on that stock is still going to 10x, 100x. And then you can borrow against your equity holdings. So, you don't really need to sell that often if you've picked the right names. If you've purchased Tesla, Nvidia, Amazon, Google, Apple, any of these names much, much earlier on, to sell it would have just been most likely the wrong thing to do. Unless you've just continuously picked the next 10x at the peak of every, you've purchased the trough and sold the peak. That's everyone's hope. But it's not very often that people are able to do that. Tanner, do you own any D-Local? No, I don't, but it is on the short list of companies for me to research and probably will be on one of these companies or on the list of one of the companies that we start to do due diligence on each week. Why is Amazon falling? I think just a general worry about the speed of the cloud growth and then capital expenditures that they're spending on not allowing for free cash flow to expand. Those were the main things that I've seen. I sold my Reddit after the after hours pump today, but why? What part of their earnings do you think that they've hit a top here? Do you think that next quarter they won't be higher? Do you have a name in mind that's going to outperform Reddit going forward? I'm not even in Reddit. I'm just saying, just because something's moved a lot doesn't mean that was a great sell. In fact, I would actually venture to bet that was probably a poor sell. And usually companies that are doing extremely well just continue to do well. I just wanted to lock in some profits. Lost some money on penny stocks lately. Ed, we could do great things together, me and you. I could tell you to stay away from those and to not cut your flowers or whatever to water your wheat. I still don't even remember the quote very well. To water your wheat. It can't be cut your flowers. I need to remember what the actual quote is. Yeah, don't cut your flowers to water your weeds. Yeah, it is. You sold an amazing business that just dominated on earnings and said that you inherently try to pick names that are risky and that you've been wrong on picking companies that have inherently not done well. I think that this is a very honest comment here, but it is a true learning lesson. Is that Reddit could be a great, and I don't know enough about Reddit, but companies that beat on revenue by over 20% after being a public company for quite a while, and it's not a small or low cap company. So RDDT. $30 billion company. The company that or the range of businesses that have treated me the best is between the $20 and $50 billion range, because they can be market leaders of a large total addressable markets. They have unbelievable efficiency in the way that their organization is set up. And they're not small enough where you're picking 1,000 X's or bankrupt. Usually if you're a $30 billion company, bankruptcy is usually far away. You're starting to have large cash stacks, lowering debts, the ability to do share purchases. Like, it's just an amazing place to be a stock picker, in my opinion, because you're picking great businesses that have less risks and less upside as well. But still, the $1 trillion range is far away now. You could pick 10 and 20 Xers now in that range. That range has always done me very well. Okay. I was bag holding Reddit for ages and averaged up, then aggressive. What do you mean bag holding for ages? This company has gone public on March 18th, 2024, and there's been very few times where you could have been bag holding. You could have been bag holding from here to here, from here to here. And what I essentially think that you mean, now bag holding for a while, so meaning you have taken profit. So what I assume is that you purchased somewhere around here and then waited out this period. Man, that's February to June. You'll be okay. Okay? And I'm not here I'm not trying to roast you, but this is like going to show how much longer of a game investing can be. Okay. What is shown, like I'm aware that you're taking profits and getting out, but I see this problem happen all the time. Companies don't need to stay range bound. The top, like some people see a company like Reddit. This happens all the time. This is just educational, Ed. I honestly, I hope you stick around and in no way do I think that this should be a point to make fun of you or anything like this. This is what I see happen to people constantly, is that they see a company like Reddit and it will have gone up to $226 and then they start to fall off and they see a buying opportunity here. This is a recovery play. That's how they see it, right? And so they end up purchasing somewhere along this range. Obviously, this would be most optimal, but you never know if it's going to turn around here. And it won't look like this if we were to zoom in. If we were to zoom in, there would be a lot of granularity and there would be days where it's gone up and little spikes here and there. That's fine. Okay. But on the way down, the way that a lot of new investors think is that they will ride it back up to 225. But then it takes longer than what they've anticipated. So then they get out early above their average. That's another thing too. People will hold on to crappy stocks so then they can return their money rather than moving that money to something that's actually growing, which would actually return your money a lot faster. Okay. Trying to hold on to something that's trash in order for a hopeful moment that it returns your money is actually probably just better to be pushed into a company that is working, that will return your you've already made a mistake, just get rid of it. But Reddit is not range bound to 224. Okay. If this continues to grow, now I'm not making an assertion on Reddit right now. This is a company I need to look at, but their beat today was so unbelievable. It makes me feel like when I'm going to take a look at their daily average users, the amount of money that they're making per user, the operational efficiencies, I'm probably going to see a lot of great signs, okay? Which just shows me that if I were to purchase this as a business, that the business does not look like this chart, that they probably didn't make a unbelievable amount of money and then lose a bunch of money and now making good money again. The sentiment on the company looked like that, but that's not how their financials looked. This is what I'm going to assert. And we can go into like fiscal AI and just to double check that, but that's going to be what I assume is what happened. Now, the fun thing about investing is that 226 is not the top here. Doesn't need to be at all. And in fact, you can buy into a company like this and watch it go to 1,000, 2,000, 8,000, and it won't be at 8,000 because obviously people also look at stocks. They go, no stock is 8,000. That's what new investors think. But then you realize that stock split all the time, and that if you were to actually look at Tesla or Google or Apple or Amazon or any of these companies would be multi-$1,000 per share. They've just been split so many times that they have regular prices for you to pay for them. But then once they start to reach those numbers again, they split again. Okay. So I would not sell Reddit just because you're up. If you think that there's something else that you would rather buy, sure. Locking in profits without needing the money is almost always a learnable mistake. I know that some people say, can't go broke taking a profit, whatever. Those are all garbage sayings from poor people. No, I'm just kidding. But like, sometimes you just need to have 1,000% gains on a stock, 2,000% gains on a stock plus, and just continue to hold it because your money is better spent in those positions than it is buying penny stocks or something that's just going to lose you money, right? That stuff is what is like gambling. If you think about buying penny stocks, that is similar to people that assert that to making bets on companies, picking out companies that continue to dominate quarter after quarter. There's no gambling to it, you know? So I don't know. We can take a look at Reddit one day and see. But yeah. I think whenever we take a look at this business, what we're going to find is not a business that looks as up and down as their stock might look. Thanks for the advice and the roast. No, I just, Ed, can I venture a guess and say that you're probably a newer investor in like the 2 to 3 year range at most? And that's perfectly fine. That's perfectly fine. I've made the exact same mistakes. The exact same. Yeah. And that's, bro, that's awesome. Like, we all have to get started. But like, for real, Reddit can do great things. And this is from not a shareholder. And I'm happy you made money. But you can make like life-changing money by betting on a company that continues to do good quarter after quarter after quarter. So keep holding even after you're up. I mean, that's how, yeah. Like if you look at where Warren Buffett has purchased Coca-Cola or Apple or something, like these are more than 10x positions. These are 20, 30, 50x positions. And the truth is that compounding businesses compound. That's exactly what they do. Let your winners ride. The amazing thing about investing is that it's filled with all of these amazing quotes to help you remember things in times whenever you have reason to let go of a business or if you get worried. Let your winners ride is a very easy one to remember. Okay? When companies are doing great and the world is using their products, don't sell. A lot of people would be very up on Nvidia, on Tesla, on Apple, and like there would be many of times to have sold those positions and take profit, but you would have missed out on so many more gains, like so much more. How to resist selling when it's down? Underwrite. So meaning, look at the company, okay? SoFi was down a ton. I mean, we went from $25 a share down to $4. Okay? So, as a shareholder, what I need to do is I need to go to, where is it? Stock price. And we'll take this out to, since they were public. So they were, $22 and then dropped all the way down to $4. Being a shareholder during this time, like I bought in around $14.50, somewhere around here. Okay. And watching it fall all the way down to 4 was a terrible feeling. I lost a ton of money. But I bought more because in that same breath, I would go in and I would look at, well, I don't want to do that. Do I really have to do it like this? I freaking hate banks. I'd look at their revenue and I'd say, well, this doesn't really correlate with the stock going from 14 down to 4. The stock looks like it's made more money this, each and every quarter, and yet the market doesn't seem to see it that way. So maybe it's something like their margins on their products, or maybe it's their net income or something along these lines. Then you realize like, oh, okay, well, actually they are being more and more profitable. And even these quarters, like whenever you see these big dips, these aren't actually real. These are like tax write-offs and goodwill write-offs that have made they're like, I actually like my charts better than this, but overall, underwrite all the main things that we talk about on the channel. The sales that come into a business, the margins that drop down into gross profit, the operating expenses that drop down into operating income, then all of the taxes and understanding all that stuff that get you to net income, then all the capital expenditures and stuff to spend for future growth into free cash flow. This is a business 101, but like really you have to know it. You have to know margins. You have to know what their KPIs are, or their key performance indicators. If all of those things are going up and the sentiment on the company is going down, probably have something right. You're probably easy to hold on to those businesses because you understand what you're holding, you know? That's why I'm here every single day. It's not because I'm looking to make changes to my portfolio every day. It's that I want to make sure that there's interviews from Anthony Noto. There's interviews from his competitors. There's interviews from, a macro standpoint. So what Trump says could change what SoFi's business does. If they Trump himself came out and said, COVID-19 is a real big problem. We need to stop students from having to pay for their loans while we also don't allow them to go to school. That doesn't make sense to us. So we're putting a pause on student loans. You put a pause on student loans. That was SoFi's entire business. That was a scary time. So we need to pay attention to that. We need to pay attention to what SoFi did to address that. So then we listened to the interview that they made the next day, which said, hey, I know investors are freaking out, but we're going to shift into personal loans and financial products, and we will be perfectly fine. We're still expecting to grow. Okay, cool. I'm not just going to trust your word for it. Let's wait to see what the numbers come out, and let's make sure that what they say is what they are actually doing. And along the line, we just continue to underwrite investments whenever things are doing poorly. So, investing is the greatest game, and it is because the financial reward could be multi-millions of dollars for every single one of us. That's within the realm of, the amount of doubles or 10x's that you need to find is very easy in a lifetime if you have the guts to stick with some of these names. But two, I mean, there's billions and billions of dollars to make on an institutional level. Like the reward for getting this game right is significant, life-changing. Not your family, but the families that your families are going to have can be supported by what you're going to do in the stock market over a lifetime. But there's a lot of work to be done as well. And some people try to find quicker ways to find that, like, drawing lines on a chart and stuff like this. And I don't agree with that. It just doesn't make sense in my head that that Trump is going to come out and start a student loan moratorium, or Anthony Noto is going to change the course of the business by getting into loan platform business by drawing lines on a chart to say that this company is going up or down. I just don't believe any of it. Okay. I believe in investing in companies and seeing that companies can continue to grow over time. What is ROI, return on investment? So like if a company can continue to invest money, if they, for every dollar that they put in, they can actually end up bringing out $1.30, then they have a significant ROI, right? So, or return on invested capital, something like this, that you just know that if they have a significant return on invested capital, that if you were to fund them with more money and you believe that they can continue to show off that every single time you give them $1, they can return back $1.30, that's a significant vehicle, right? If they can't, if that ROI is really low, then maybe it's not a very investable business. Depends on the type of business that you're in if you really need to follow these types of things. Such a great rant. Thank you. I am passionate about this stuff. I love talking about stocks. And some answers, like the fun thing too, is that some answers we just don't have, right? Like there is some gut feeling and belief of what you believe into the future, or like there's some level of, hey, Coinbase is a really expensive company, and you know, you kind of just have to keep watching and learning to understand the ratio. Like we're at base level right here, but there's so many other things that you need to get into in terms of the multiples. Like you can pick a winning company, but it might not be a winning stock because everyone's already bid up the company so far. But yeah, I was just going to say that Coinbase, for example, so far it looks very good, but you have to have a belief in the underlying, like you can't just bet on the company and the revenues going in a certain direction. You kind of need to know what you believe is going to happen with cryptocurrency. And if there's other companies that are potentially doing something even better than them, you know? So I don't know. You know, I don't know. Anyway. Just don't put your entire life savings into one stock. It'll scare you. Yeah, I mean, I don't. I like to diversify. I've got about 15 names. And I underwrite them. But I also have a lot more time than most people. A lot of people have, you know, full-time jobs and then a portfolio, which is hard to maintain because you're not just sitting around learning about stocks all day. I'm at an advantage because this is what I'm getting paid to make sure that the investments that I get paid on, even more than what I get paid here, is working out. So, but it's not like I was assigned this job. I picked it. So, yeah. How much in general should recover in 1 month? 10%? Huh? Are you saying like how much should stocks move? What are the names in your portfolio? So I'm happy to talk about the names in my portfolio if they're brought up in conversation. However, there are people that support my channel that I like to give them some advantage or some benefit to supporting the channel for me. And so I keep my portfolio and the allocation and the buys and sell alerts private to that masterclass group. But yeah, they're names that we've covered here as well. Like, you know, Google, Amazon, Nvidia, SoFi, Robinhood, all those types of names. Yeah, honestly though, this is one thing that like if I could teach anyone, the second you realize that there is no capped upside to a stock, it'll set you free. Okay? It's why I'm holding Nvidia and being a big believer is that if you look at the stock and it's at 4.4 trillion, you're going, "Oh my God, how much higher can it go?" There's not another company that's $4.4 trillion. Like, it absolutely can keep climbing because it's dependent on how much money they're making. And there's no real cap to that either. It gets harder the bigger you are, but there's no cap to how much money a company can make. There's no rule that says that they have to stop. Your DD on companies all come from reading its financial statements. Honestly, it's not like I sit around like opening up 10Qs and going through them. Honestly, I know a lot of like nerdy stock guys will say that they do that, but I can't stand just staring at blank numbers on white pieces of paper. So I like listening to the earnings calls, going through their presentations, charting it myself, and doing it that way. If you can find a data aggregator that's accurate, that's a very important part. The accuracy of data aggregators, then that makes it very easy as well. Like Fiscal, like being able to just like have a thing that you can just like go on and like for Amazon, for example, they just had earnings today. And I can go onto Amazon and be like, okay, well, what does revenue look like? Like, let's visualize this. What does the revenue growth rate look on that? Let's visualize that. You know, let's go to, so this is another thing with data aggregators is none of them really get the non-GAAP stuff. They do. So you can be like, okay, well, I want to see what all their lines of revenue look like. And then let's stack all that. And then you can actually like take a look at how their business has done over time and see the growth rates of each, and then see the compounded annual growth rates of each of these businesses. Like, wow, third party's doing 14% year over year, or like each year. Advertising is doing 24.92%. It's a little small on your screen, but on mine, it looks fine. So if you have a data aggregator, it goes very fast. Tanner, you should get a Bloomberg terminal. So hold on a sec. Giuseppe, I ended up reaching out and partnering with a company that is not the case right now, should be next week, but they've come out with a new product that is going to be as fast, if not faster than the Bloomberg terminal for a much cheaper cost for me. And for everyone, but yeah, and they're using artificial intelligence to actually scrape all the data. So I think that the Bloomberg terminal is going to have a lot of competition in this new world. And I'm very excited about that. But I should be able to have that. So then, like, whenever reports come out, that I have that data immediately. Like, immediately. What is a Bloomberg terminal? It's like a $30,000 a year data aggregator. They essentially scrape all the data, but like, I mean, all of the data in financial markets and give it to you instantaneously, even before, you know, like what you'll get off of an investor relations page, because most times a company has to report that information to the SEC before it actually posts it publicly. So companies like Bloomberg and stuff can get that data, and they literally have like analysts in the Philippines that actually like scan and fax and put all that data in individually. It's how a lot of them get it done, actually, like Cap IQ and all those ones. It's just like analysts that are plugging in the data manually. What data aggregator were you showing? That's Fiscal AI. I actually have a coupon code or whatever. I am affiliated with them. It's in my description. But honestly, and I swear, like, on everything, I'm only partnering with companies that I absolutely like. You're not going to see some no-name business. I don't know if you guys know this about Fiscal. They're one of like the fastest growing companies in this space, because of the new ways that they're doing. Like if you look at like Perplexity Finance and all the data that like even the new players have and a lot of fintechs, they're APIs to Fiscal AI because they're just like one of the fastest growers. So I was really hesitant. They're FinChat. If you guys have ever heard of FinChat, it's the exact same thing. They just rebranded their name. But yeah, the fact that they have non-GAAP data and the way that they do it is just, I think through AI as well, Fiscal AI, I assume. But yeah, so they can actually give you like that non-GAAP data that usually people would just have to like plug into spreadsheets, and they have it exact same day. So you can just like see all this data here. Oh, why can't you see my screen? You could just see like all this data here for them. But my favorite part is if you go to like the actual ratios, you could just see like what the price to free cash flow, enterprise to sales is, enterprise value to gross profit, EV to EBITDA, or EBIT, which is operating income. You can just immediately pull these up for stocks. And so you can just drop all this and then just start looking at, you know, what's the PE, what's the forward PE as well. You can do this and compare a bunch of different companies. You can drag this closer. Yeah. Or you can drag it further away. All the way back to 2015. You know? Anyway. Any other questions, or are we wrapping? All right, let's do this then. Ladies and gentlemen, I am about to post a video. In fact, I'm going to make it public right now. Okay, should be public. And I'll put the link in the description, or sorry, here. So if you guys go to that link, it'll take you to this video, which is posted just a couple seconds ago. SoFi stock dilution drama is a huge win for investors. I go in and describe why I'm buying more based on this dilution and why the stock is actually recovering. So, same shirt. Yeah, I recorded it like 20 minutes before I went live. But go check that out if you guys want. Leave here. Go see that. It's very, very interesting. And I'll just say I have increased my expectations for SoFi for both revenue and EPS for full year 2025 and 26. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. And bye for now.